For that. Time for an exclusive now. Sources are saying that tweaks are being sought on the project financing rules by the IBA and the government, along with suggestions for a deferred and staggered rollout of the expected credit loss norms. Sapna Das has the details. Sapna, what are your sources telling you?
Well, first of all, in terms of the project finance rules, the draft rules are out in the public domain by the Reserve Bank of India, put out quite some time back. So here, both the banking industry as well as the government as important stakeholders to this entire matter, some suggestions have been made to the regulators. What we are given to understand is what sources are telling us. So, of course, first of all, the 5% norm that we are talking about, well, there is an across-the-board opinion within the industry and within other stakeholders that this is too steep. Not only will it cause higher provisioning in terms of, the cost of financing going up for such projects, but this could also impact credit flow to important infra sectors. So this is one element that suggestions have gone to the regulator in terms of trying to tone it down. That's one. Second, also in terms of, the higher provisioning norms does not make a sectoral differentiation. Whether it's ports or roadways or, maybe a renewable energy project, all of them are being suggested that they should be at 5% provisioning norm during the construction course. And at the last event, 5% is what the norm that is being suggested by RBI. So there is no sectoral differentiation, so to speak. Not every sector has the same risk assessment. So suggestions have also been made on this front that maybe a relook or a rethink may be required at the banking regulators' end. Third, in terms of the credit event basically relates to the possibility of defaults under such project finance, under such projects. Now, here also, the suggestion as per the RBI draft indicates that an independent re-evaluation will be required. Now, this could basically trigger restructuring of such projects in case there are signs of distress, there are signs of credit impairment. And this is how a credit event has been described. And this has to be done on an annual basis by the bank. So this could be quite cumbersome and it will have some other fallout as well. All of these things put together, there is a concerted effort both by the banking industry and probably even the government in trying to convince the Reserve Bank to do some kind of a rethink on some of these key aspects. Last but not the least, there is also a discussion paper that had been put out by RBI sometime last year in terms of the expected credit loss provisioning norms. Now, that's still a discussion state, but here too we are given to understand that some additional time, may have already been sought for banks to basically align to this as and how the RBI is ready with those guidelines.
Sapna, thanks a lot for that update.